Elon Musk is wasting no time putting his stamp on Twitter. He fired a number of top executives just after buying the company for $44 billion and taking it private. Musk has said he wants to bolster free speech. CBS's Jonathan Vigliotti on what that could mean for the social media giant.
Well, I think it's very important for there to be an inclusive arena for free speech.
It's been less than 24 hours since Elon Musk proclaimed himself Chief Twit and declared the bird is freed. And already his vision for an uncaged Twitter is coming into rapid focus. Among the 3 top executives who were reportedly fired yesterday is Vijaya Gadde, who oversaw Twitter's policy on misinformation. Musk has been outspoken against censorship.
All right. Today is Monday, October 31st, aka Happy Halloween. Hope you had a great weekend, partying all over the place, bar hopping, and catching all of the STDs you can. And now you're ready to watch my show. You know why? Because I got a good one for you tonight. Now let's start by this. A lot of talk about inflation is peaking, inflation is going down. Hey, Federal Reserve, please tone it down with the interest rate hikes. Our portfolios are down 20, 30, 40, 50% for the year. But we don't want you to slow down interest rate hikes because of that. We're asking you to slow down interest rate hikes because inflation is going down. You're winning, Mr. Fed. Well, we know that inflation is not going down in this country. Inflation remains high, it remains sticky, and across the Atlantic, it's even getting worse. Today in the morning, we got the inflation report from the Eurozone, and inflation soared to a new record. 10.7% year over year. In other words, inflation continues to go higher and higher and higher. On the other hand, the GDP economic growth continues to go lower and lower and lower. Now grab your Economics 101 textbook, or better yet, just listen to me. This phenomenon is called stagflation. It happens when inflation is high, yet the pace of economic growth is stagnating and slowing down. It is the worst and most destructive economic phenomenon. So that's what's going on across the Atlantic. But here in the United States, the talk of the town here in Wall Street and the financial management community is comes Wednesday, and the Fed Chairman Jerome Powell will announce a pivot. He will announce a slowdown on the pace of interest rate hikes. And therefore, in anticipation of that, you gotta go all in and buy the stock market because the stock market is gonna blast significantly higher. And you don't want to miss out. You gotta listen to your inner FOMO and buy. Now, everybody around me, including my co-workers who I respect, believe in this theory that the Fed will pivot and you're wrong by being too bearish, yada, yada, yada. Now, here's the thing. I know that the Fed chairman is a snake and he can do whatever he wants to do, but I'm listening to his own words. We made a video about it, Dark Powell, the September meeting, word by word. I explained to you in details. In Jerome Powell's words, what would it take for him to pivot? And none of these conditions are met yet, not even close. So in my opinion, this whole talk about a pivot will be met with a wake-up call comes Wednesday. But until then, we have a lot of other things to talk about, including tonight's topic, Elon Musk and Twitter. And without further ado, here it is, in focus tonight. The Purge. Elon is in Twitter HQ, cleaning house. You're fired. You're gone. Your ass is out. We are now all aware that Elon Musk is the new, the Twit chief, the NetTwit, whatever. He's the new boss of Twitter. And he's releasing the bird free. No more censorship. Freedom, baby. And look, viewers of this channel know that I'm not a fan of Elon. I'm an Elon critic. But in this case, he's going head-to-head against other folks that I happen to despise even more. And these folks are the deep state oligarchy, the unholy alliance between the intelligence apparatus up Uranus and certain oligarchs in this country. Billionaires mostly happen to be in the tech industry. And of course, they love censorship. Anything they don't like, they take away. To protect democracy, we got to impose some censorship and tyrannical tendencies. So it is not a surprise that a lot of folks are happy by the takeover from Elon Musk and getting rid of all of these tools and puppets. Now, do we trust Musk 100%? Of course not. We got to see him walk the walk and indeed deliver freedom of speech and lack of censorship. With limitation, of course. Not everything can fly. And this is exactly what Elon Musk said. He said, I did it to try to help humanity, whom I love. The richest man on the planet loves humanity. Okay. Elon Musk drops a new statement as his Twitter takeover inches closer and says he won't turn it into a free-for-all hellscape. Wait till Elon comes out and says, we have to protect democracy and civilization. So we have to censor some folks. In the meantime, Elon Musk is cleaning house in Twitter HQ. He dissolved the board entirely. Goodbye, you're fired, all of you. And he now crowned himself as the sole director of Twitter. And Reverend Elon is taking a lot of steps already. To begin with, he is reversing lifetime bans for Twitter users. So if you went to Twitter jail, your best hope is Reverend Elon unlocking the key or unlocking the gate and letting you go free. One of the first people that Elon Musk released is Kanye West, also known as Ye. He's now back in Twitter. Although Elon Musk says that he was reinstated even before he took over the company. And Elon clarified that he's not going to reinstate any banned accounts until after forming a content moderation council, quote unquote. But this was not only it. Elon took other steps. Perhaps more drastic steps. He got rid of the CEO and other top executives. You're fired. You're gone. Goodbye. And before you feel bad for these executives, they're going to get the golden parachutes because they're getting fired for no reason. So they're going to collect $122 million. But hold your horses because there is a catch. Before I tell you what the catch is, Twitter former CFO, who's at least hoping that he's going to get a $25.5 million golden parachute, he said that the past 6 months, this is the time when Elon Musk announced that he's taking over the company. The past 6 months have pulled on every mental muscle I have developed in 48 years. Your butt cheeks included, sir. Anyhow, the problem for these executives, including the fired CEO, well, Elon Musk fired them for cause, which means they're not entitled to the golden parachute. You're fired and you get nothing. So here comes the tsunami of lawsuits. And of course, there's a difference between the executives, whom I don't have any empathy for, and then the regular employees at Twitter, whom I have some empathy for, and I expressed that clearly in the last video. And now Twitter staff is reacting to Elon Musk's takeover by saying that I'm fully expecting him to fire 69% of us on Friday at 4:20 p.m. And this is entirely possible, by the way. But besides thinking about reversing lifetime bans and getting rid of the top execs, Elon Musk is also taking steps to monetize Twitter. Now, if you're looking for your blue check, because you're verified and you're safe, well, you got to pay $20 a month for that blue check mark. So that's step number 1 in the monetization. And of course, the media personalities, they don't like this step at all. And they say that Elon Musk does not understand the purpose of Twitter's blue check mark. Hey, Elon, the blue check is meant to say to advertisers that we're safe, that we're in cahoots with the program. You don't get to charge us for that. And immediately the backlash was here. Stephen King, who writes these horror novels, well, he says he'll quit Twitter if Elon Musk makes him pay $20 a month to be verified. And he adds they should pay me. Now, this is an interesting point because let's say, forget about Stephen King. Who cares about this guy anyways? But let's say that you're one of the top influencers. Say Kim Kardashian. Is Elon Musk going to charge Kim Kardashian $20 a month to be in Twitter or to be verified in Twitter? I don't see how that's going to work. Maybe in that case, you want to pay her to be in Twitter exclusively. But what do I know? I'm not the billionaire after all. He is. And he says that comedy is now legal on Twitter, okay? And he also says that perhaps Twitter needs to reinstate the short video app Vine. Here we go with the TikTok impersonation. And of course, Mr. Beast said if you did that and actually competed with TikTok, that'd be hilarious. Hilarious because Twitter is going to go down the toilet. That's why. See, either the new strategy for Twitter is competing with the likes of YouTube and Netflix, meaning long content, legit content, or they're going to do this stupidity in memes and TikTok. What is the point of having another TikTok? This is the same stupidity that YouTube is doing right now, and it is blowing up right in their faces. But here's the one that's going to get Elon in trouble. You see, somebody tweeted to Elon that the Secretary of State of Arizona or whatever got blocked on Twitter. Elon responded and said he's going to look into it. And immediately, the guy got reinstated on Twitter. No more blocks. And this guy happens to be a Republican candidate. So now Elon Musk is pissing off the Democrats, the media, and everybody else. And here comes the pitchforks against Reverend Elon. And they started mild. They started by, hey, we're concerned here. How is he going to manage 3, 4, 5 companies at the same time? We're just worried about his health. But once it became clear that Reverend Elon Musk is challenging the media's narrative, oh boy, the pitchforks got a lot sharper. For example, MarketWatch says Elon Musk's takeover of Twitter will destroy freedom of speech, not protect it. And General Motors pulled out their ads out of Twitter. Now, you could say that GM is a competitor with Tesla that Elon Musk owns, so it is understandable. But wait till you see that tsunami of advertisers. We're going to pull out of Twitter too. It's going to happen. You watch. And it's not just the media and GM, it's also Ukraine. Yep, Ukraine questions Twitter takeover amid precarious ties with Musk. And of course, the Ukrainians are pissed off because Elon suggested that they should make peace with Russia and end the war. How dare you push for peace? But anyhow, the attacks are getting sharper and sharper and sharper. The Washington Post, which you know who owns that one, right? They say that racist tweets quickly surfaced after Musk closed the Twitter deal. Business Insider says use of N-word on Twitter jumped by almost 500% after Elon Musk takeover as trolls test the limits on free speech, report says. Is this one of these reports with the anonymous sources? And who are these trolls, by the way? You see, free speech is bad. If you allow free speech, this is going to happen. And even LeBron James got into it and said that these tweets are scary AF. And of course, Elon responded. I don't know what he said, but I mean, this whole thing is weird. He takes over and all of a sudden the trolls come out of the woodworks. What's going on here? Even CNBC says Elon Musk, the new owner of Twitter, tweets unfounded anti-LGBTQ conspiracy theory about Paul Pelosi attack. Now, I'm not sure what he tweeted because he deleted the tweet, but you gotta be careful now. Even the New York Times came out and said that Elon Musk in a tweet shares link from site known to publish false news. And in response, Elon Musk says, "This is fake. I did not tweet out a link to the New York Times." Wow. But perhaps this is the one that's going to land. If the government gets into it, if the government says we have to ban Twitter or limit Twitter or issue a competitor to Twitter because of Elon Musk being a national security threat. And of course, they accused Reverend Elon of having ties with China, but most importantly with Saudi Arabia. The senator from the state of he says, today I am requesting the Committee on Foreign Investment, which reviews acquisitions of U.S. business by foreign buyers, to conduct an investigation into the national security implications of Saudi Arabia's purchase of Twitter. He also added that if this deal goes through, 2 of the most important U.S. social media platforms will be owned in whole or in part by China, TikTok, and Saudi Arabia, Twitter. This is a dangerous trend and we don't have to accept it. Now, I got news for the senator. Saudi Arabia already owned a piece of Twitter, a big piece I should say, even before Elon took over. So what changed here? What's new? I think we all know the answer, but here's my take. I'm not a fan of Elon. I'm not a fan of the folks who ran Twitter before him, but I say if Elon says he's going to give free speech, I'll be open-minded, but if 2 assholes want to go at it, Elon versus these media types and the politicians behind them, I say let's pass the popcorn and watch the show. And speaking of the show, we got a show to run here. We're going to cover the stock market information for you. So let's do that, and we begin with the closing of the indices today. And here we go. The Dow Industrial Average was down by 128.85 points, or a decline of 0.39%. The Nasdaq leading the declines, down by 114.31 points, or a loss of 1.03%. The S&P also in the red, down by 29.08 points, or a decline for 0.75%. When it comes to the sector's performances today, at number 1, capturing the gold, the silver, and the bronze metals, energy, and barely in the green by the way. The rest all in the red, led by communication services, technology, and financials. When it comes to the advance to decline ratios, NYSE 45% advancing versus 53% declining. The Nasdaq 43% advancing versus 54% declining. The calm before the storm. We're all waiting for Chairman Powell to come out and spew whatever vomit he's going to spew. But anyways, until then, let's move on to futures, commodities. What's going on here? Of course, we continue to get the draconian news out of China. The lockdowns continue to go on. Oh God, we have 2 cases out of 5 billion people. We got to shut down the country. And this is impacting energy commodities negatively. Comes to think about it, maybe China is Joe Biden's last ally. Think about it. Think about what you think about. Anyhow, the WTI was down a little over 2.25%. Brent down almost 4% for the day. The gasoline RBOB down almost 2.5%. Meanwhile, heating oil down a little over 2.5%. And here it is, the party boy back in charge. Natural gas with gains of almost 10% for the day. So now we might see the dip buying the short covering in natural gas, and this should push the commodities higher and higher and higher. So we might see the phenomenon of money coming out of crude moving into natural gas. Unfortunately for energy investors, the Biden administration is now floating windfall taxes on energy producers. Let's tighten the noose on our own producers and making them at disadvantage against Saudi and Russian producers. That's smart, isn't it? Anyhow, when it comes to softs, mostly in the green, and the rebounds led by the biggest losers so far, namely coffee, with a rebound of almost 4.5% for the day, and with coffee comes sugar, with a rebound of a little over 2.25%. And then we have cocoa. You got to add cocoa to the coffee and sugar to make a mocha, and that's also up by about 1%. On the other hand, we have flattish activities for cotton and OJ futures, while lumber futures slightly in the red, down by about 0.75%. Now, the dollar was higher for the day, and therefore metals are down across the board, be it gold, silver, platinum, copper, palladium, all down for the day. If the dollar goes down again, we will see a rebound in metals. Meanwhile, meats, flattish activities for live and feeder cattle futures. On the other hand, lean hogs getting slaughtered today, down a little over 1.5%. And here it is. We talked about Russia, Ukraine. The Russians are out of the deal, the grains deal with Ukraine, and this is going to push grains prices higher, namely wheat, and therefore grains up across the board, and the gains are led by wheat. The commodity shot up higher by almost 7% in a single day. Here comes hunger, baby. And of course, we have sizable gains of a little over 4.5% for oats, but also meaningful gains for soybeans, corn, canola, rough rice, all in the green. And by the way, we're going to cover the chart of the ticker WEAT, wheat, in the charts analysis. But we do have some conflicting news here, because the UN says some of the grain vessels are actually moving out of ports in Ukraine. But the news that I got, the Russians are out of the deal. They're done. They're not going to allow new vessels to get out. But they're allowing some of the vessels that are already loaded and ready to go, they're allowing some of them to go. Specifically, if they're heading into countries that Russia perceives as allies. So that's what's going on. But most importantly, we got news today, and the timing is really interesting, that over the summer in June, notice, why is this news coming out right now? But back in June, the President of the United States, Joe Biden, lost his temper in a phone call with Ukrainian President Zelensky. And he told him, "You got to be more grateful, Jack. We're sending you all kind of weapons to fight the Ukrainians." But here's the important take of all of this. This is a hint, a clue of what's about to happen after the midterms, which is the support by the United States to Ukraine will diminish. What does that mean? Does it mean that we're about to see a peace deal, a settlement of some sort? If that is the case, the rally in wheat, the rally in natural gas, the rally in oil will all come down crashing. So this is something to think about. On to the big casino, the options market. What's going on here? The volume is settling down from Friday's activities, and we're seeing more buying of calls. Again, there is this conviction among money managers, among the retail community, among the mom and pops, everybody, that the Fed is going to pivot. The Fed is going to hint that they're going to do the 75 and then the 50 in December, and this will be good for equities. So they're buying more calls. Now, I don't know what Jerome Powell is going to say, whether he's going to hint for a pivot or not. I got to be prepared for either scenario. And I told you to watch the dollar and yields. That's what really matters. For now, the dollar is moving higher again, but it remains in a bearish trend. It remains in a downward trend. And the same goes for yields. So the market is heading into the meeting with preparation that the Fed is indeed going to pivot. If the market is right, upside and you happen to be bearish and you have short positions, you can hedge against that by buying calls. And this is what a lot of hedge fund managers are doing right now. So this explains the boost in the put to call ratio in favor of calls, of course. In any case, the hottest table by far was Meta, with around 1.2 million contracts traded today. About 68% of those were calls. And by the way, we're going to cover Meta's chart in the charts analysis because I have a theory here. We might have a massive trade ahead of us, and you don't want to miss it. But here it is, number 2, Amazon, with around 1.2 million contracts traded today. About 63% of those were calls. And at number 3, Tesla, with around 1.1 million contracts traded today. About 60.5% of those were calls. On to the unusual activities that took place in the options market today. We start with the ticker HD for Home Depot. Somebody sees a downside coming for the name, and they bought the 250 puts for the expiration date, December 16, with expectations that the name could go down and lose more than 15.5% of its value by then. They paid around $2.50 a piece to enter this trade, all in all spending around $2.6 million. And then what about the ticker XLE? This is the energy ETF. Now, here's what I would say, and what I said last night. If you happen to be sitting on massive gains from energy, take some profits off the table. Take some chips off. Because number one, what if Jerome Powell comes out hawkish and the dollar shoots up higher? You're going to see energy going down. What if Joe Biden taxes energy companies? We're going to see energy stocks going down. So what is the harm in booking profits right now? I booked some profits from the oil-specific stocks, but I added to the natural gas producers, the Coterras, the EQTs. We're going to talk about all of that in the heat map analysis and then some in the charts analysis. But here it is. Somebody's betting against the XLE or hedging by buying the 84 puts for the expiration date, December 16, with expectations that the XLE could go down and lose more than 6.5% of its value by then. They paid around $2.35 a piece to enter this trade, all in all spending around $2.3 million. And then at the bottom of the table, what about the ticker DASH DoorDash? The name is reporting earnings this week, and somebody's playing an earnings play here. They see upside coming for Dash, and they bought the 47 calls for the expiration date, November 4th, with expectations that Dash could add more than 8% worth of gains by then. They paid around $2.20 a piece to enter this trade, all in all spending around $1.5 million. Continuing with interesting trades, what about the ticker ABNB, Airbnb? Now the name is also reporting earnings, I believe, this week, and let's hope it goes down because these suckers destroyed the American dream. You have all of these so-called investors scooping single-family homes only to list them on Airbnb, and they took inventory from mom and pops who want to buy a home for their family, and they contributed to the rise in inflation in housing. So this mania has to come to an end. In the meantime, somebody sees more upside for Airbnb when it reports earnings, and they bought the 115 calls for the expiration date, November 4th, which also happens to be Friday, meaning this is an earnings play, and the expectations here that Airbnb will score gains more than 7.5% by the end of the week. They paid around $2.60 a piece to enter this trade, all in all spending around $1.5 million. And lastly, what about the ticker SCHW? This is for Charles Schwab. The name was down big after earnings, but since then it managed to rebound by a little bit and somebody sees more gains to come. They bought the 87.5 calls for the expiration date, January 20, with expectations that the name could score gains more than 10% by then. They paid around $2.35 a piece to enter this trade, all in all spending around $1 million. On to the heat map analysis. What's going on here? Muted to negative for the most part. The calm before the storm. Everybody's anticipating the Fed meeting, what Jerome Powell's going to say. So we're seeing some profit taking here in the big caps, be it Apple, be it Google, be it Meta. Even names like Nvidia, all of these names that shot up higher last week, we're seeing a lot of profit taking because these are the names that are going to go down the most if we see the Fed coming out hawkish. Notice that even in, let's say, home builders, Lennar, D.H. Horton, the plays that we went long last week, they're getting hammered this week, even though yields did not move by a lot. What does that mean? Folks are booking profits. They know that these are tradable opportunities. You get in, you make a buck or two, and you get out. Always be closing because you have no idea what's going to happen next. In the meantime, due to the surge in natural gas prices, we're seeing fertilizers also moving higher, names such as Mosaic moving higher, along with natural gas stocks such as Coterra, such as EQT. My pick today was EQT. A lot of you followed and you made a lot of money, and we're just getting started, baby. My favorite, SLB, Schlumberger, is also moving higher, although this name is going to catch some overbought conditions at some point. But mind you, since we started talking about it, the name is up over 40%. Imagine this, 40% in less than a month. But now let's talk about the movers and some corporate news here because Apple, remember Apple on Friday, everybody said that this is it. This is the safest name in the big caps. You got to go long Apple, yada, yada, yada. Well, today Apple is down and I believe it's going to go down further. This is a shorting opportunity, one of the few left in the stock market right now. It's not just that the earnings are slowing down dramatically, but we got bad news out of China. Apparently, the Foxconn factory is shut down due to the thing restrictions. And this could cut down iPhone production by 30%. Of course, the media is so protective of Apple. Every time we get bad news about Apple, they come out with a counterpiece saying, oh, it's not a big deal. When somebody says, oh, we have some indicators that the demand for iPhones is slowing down, the analysts and the media come out and says, oh, this is just one supplier. You cannot make any assumptions based upon that. Okay, now they say that Foxconn is shifting the production from this factory to another factory. No big deal. Keep your blindfolds on and continue to buy Apple. Buy. And then we have news from Ford, and CEO Jim Farley says that the car manufacturer has too many people working right now. In other words, he's about to fire a lot of folks. And listen, this is going to happen across many companies, not just Ford, because a lot of companies are going to come to the conclusion that the demand is slowing down. This is what the Fed wants after all, and they happen to overhire based on Fugazi demand in 2020 and 2021 when baby print was going on, and now they have to adjust to the new Fed policy. That means laying off thousands, if not millions of employees. And then we have news from a company that I own shares at, Kroger, and the company had to pay $180,000 to employees who were fired because they refused to wear LGBTQ+. How much is the monthly subscription for that one? But anyhow, it's Halloween after all, so let's go over some horror stories courtesy of Airbnb. And the headline reads, and this is really scary by the way, Traveler sues Airbnb for $1.3 million after husband dies from contaminated hot tub. I believe this is the picture of the gentleman, I don't know. Sandra Birmingham, 54, so if that's her husband, she happens to be a cougar baby, my kind of gal. But anyways, they were visiting Gozo, Malta with her family in 2016 when her husband Paul became sick after using the hot tub in their Airbnb rental. Paul died a few days after returning home from the Christmas holiday from Lyonnaires disease. Listen to this. Birmingham is now fighting against the VRU company. She believes that the contaminated hot tub was the culprit that took her husband's life. Sandra plans to sue the company for $1.3 million. Medical professionals determined that Paul died as a result of Legionella pneumonia, a deadly lung infection caused by bacteria. Lyonnaires. Hold on, I should look at the pronunciation for this one. Hold on.
A few moments later.
Legionnaires.
And this Legionnaire's disease is spread through water droplets. It cannot be transmitted from person to person, thank God, and hot tubs are breeding grounds for the bacteria if they're not adequately clean. Listen to this. Paul only went in the hot tub once on New Year's Eve, and he was in the water for just seconds. Wow. The bacteria is airborne, and I believe he was infected soon after he checked in to the farmhouse. It takes seconds, and boom, you're gone. And of course, an Airbnb spokesperson released a statement saying, "We were heartbroken to learn of this tragic incident at the time, and our thoughts are family. Please don't sue us. Goodbye. We'll give you a refund, but that's it." And here's another one. It says, couple claims Airbnb told them to check out immediately and not tell the host. It was scary. What is that all about? Here it is. The TikToker and her boyfriend quickly packed their things. They sprinted down the stairs, got in the car, and fled the Airbnb. The video racked up 12.8 million views, and everyone demanded to know more. A representative from Airbnb told In the Know the guests have been supported. We have no further comment. The host does not know about this situation and will not know until we leave, and to contact Airbnb as soon as we get out of there. This is the guest. She still has no clue what was happening, so she and her boyfriend just left. Later that day, she got a text from her host telling her to discard any weird or suspicious messages from Airbnb. Uh-oh. The host called again, realizing they had left after seeing the viral TikTok. The host claimed that a previous guest told Airbnb dangerous but untrue things about him. Oh, really? Airbnb never told her the issue. only that the host violated the company's guidelines. So there you go. How about you just stay at the Hilton, right? But anyways, moving on to the heat map for the ETFs down across the board with few exceptions, and these exceptions happen to be mostly commodities. For example, energy ETFs, be it the XOP, XLE, or most importantly the OIH, which was up by over 3% today, mostly because of SLB, my favorite. But anyways, for the most part, down across the board, growth, once again, underperforming value. But look at this, when it comes to natural gas, UNG and the ticker BOIL all surging higher based on the move in the commodity today. And of course, when it comes to international, down across the board, led by Chinese ETFs, stay the hell out of China. A lot of you buy the dips in Alibaba and JD, and you think you're a genius. And you're going to feel like a genius for about a second or two, and then these stocks are going to flush down big. Stay away from any Chinese stocks. Matter of fact, stay away from any stock of any American company with massive exposure to China. Something big is going to happen. China is going to retaliate against all of these chip wars that we're launching against them. You don't want to be standing on the way when that happens. On the other hand, you got the EWZ Brazil. Initially was down about 3 to 4%, but finished the day higher by about 3.5%. And this is, of course, based on the news that we got overnight that Lula is now the new president of Brazil. You like Lula? I don't know. I don't care. I don't live there. But anyhow, moving on to charts, let's start with the SPY, the S&P 500 30 minutes chart. What's going on here? Nothing meaningful happened today. Yes, we had a gap down. The chart went down to the support of 385.15. It is consolidating around this number. The bears would argue that this is a bear flag consolidation pattern, and down we go. And the next support would be 379.5. And I say even if we go down there, the bulls remain in charge. The bears are not going to be in charge until the support of 375.5 is gone. And maybe this is what's happening right now, but you cannot bet on it until the Fed is out of the way. And here's the daily chart for the continuous contract for the S&P 500's futures contract. Nothing happened today. It was a down day, but the chart did not even lose the support of 3,855, so the bulls remain in charge. The volume is below average. The momentum indicators are firming up. You're not going to become hyper bearish against this chart until it loses the support of 3,720.5. Absent of that, the bulls remain in charge. And look, here's the weekly chart for the SPX, the cash index for the S&P 500. A lot of technical analysts, including Katie Stockton, who I respect, and even Morgan Stanley Mike Wilson, they said that we're going to see a bear market rally before this thing even started. And their target is 3,900. If the chart gets there, it's going to run out of gas. And then the bear market will resume. If that is the case, the chart already got to 3,900, and now what? No conclusion yet, but it is facing resistance at 3,900. Now the chart has some cushion here. Even if it goes down, it has plenty of cushion that could keep the momentum on the bull's side. Because this chart is not going to become bearish until the chart loses 3,500 as support. But before it does that, it got 3,800 as support. So the bulls got 3,800. That is support number one. That is the cushion. And then the bigger cushion is 3,500. And the talk among money managers right now, will 3,500 hold until the end of the year? I don't know the answer to that. If I did, I wouldn't be doing a YouTube show. Instead, I'd be hiding in a bunker, busy becoming the richest man on the planet. But here's what I'm going to say. 3,500 is stiff support. And it's not going to be easy to crack below 3,500. It's going to take a lot. It's going to take the Fed. It's going to take the dollar moving higher. It's going to take yields blasting higher, making higher highs. A lot of things have to happen before 3,500 is gone, which brings up the question, are we going to see consolidation in range all the way till the year end? That is another theory, but we'll take it one day at a time. Now, most viewers know where I stand. I think 3,500 will be taken out before the end of the year. But again, we'll take it one step at a time. Here is the Q's 30 minutes chart for the NASDAQ. What's going on here? The chart did lose support of 280, and it is now consolidating in a bear flag pattern. But does that even matter? It doesn't really. Until the chart cracks below the June bottom, 269.29, and loses that as support once and for all, you're not going to become hyper bearish. Unless, of course, you love to eat pies. Then have at it. Because when we look at the daily chart for the continuous contract for the Qs, the reverse head and shoulder pattern remains intact. It's not going to be gone until the June bottom is gone, which sits at around 11,058.5. The volume is below average. Momentum indicators are on the bull side, not the bear side, but they're weakening in the Qs, unlike the SPY, and that's notable. When it comes to the IWM, the Russell 2000 30 minutes chart, what's going on here? This is the most bullish chart, leading the Qs, leading the SPY, the S&P. Not sure if it is leading the Dow Jones, but it is certainly outperforming the other two. Now, a lot of folks, and I said this last night, even my own colleagues say that the bottom in the Russell 2000 is in, and if you're going to buy anything, you got to buy small caps. I disagree. I don't think the bottom is in, but to each his own. For now, the chart is consolidating in a bullish pattern at 183.25. Notice that the Qs consolidating in a bear flag, the SPY consolidating in a bear flag, the IWM is consolidating in a bull flag pattern. We have a massive divergence here. Somebody's lying. Is it the IWM painting a rosy picture when the reality says otherwise? Or is it the Qs and the SPY, but mostly the Qs, painting a more cautious picture when in reality the Fed is going to pivot? And higher we go, we're going to resolve this problem in a couple of days. But perhaps the key to answering all of that is this chart, the dollar. Now, the dollar pushed higher today, yet it remains in negative divergence in the RSI. It remains below the resistance at around 111.5. It is still making lower highs and lower lows. What does that mean? Dollar bears, equities bulls remain in charge. But dollar bulls, equities bears are closing in. When we switch to a line chart, we see a consolidation pattern. If there is a break above the consolidation pattern, you know that the dollar turned bullish. And in effect, equities are turning bearish. And perhaps the confirmation that the dollar is going to pop higher is gold. If the dollar has indeed lost momentum and it's about to make a lower low, why couldn't gold rally higher? Why couldn't gold crack above 1,671? You might say, oh, gold is conservative. Gold wants to wait until the Fed is out of the way before making the move above the number, yada, yada, yada. I say if that is the case, then why not consolidate under 1,671? Why the pullback? Why is the chart heading into making or violating the double bottom? For now, it didn't, but if it does, this is a bearish development for the chart, which indicates the dollar is moving higher. Something to keep in mind. Likewise, when we look at the daily chart for oil, Brent, it is stalling right now. The hopes for an ABC pattern still here, but the chart is running out of time. If it doesn't play sooner, the better. The opposite is going to happen. The chart will go down to 85 and retest that as support. Now, why is oil consolidating right now? Waiting for the Fed, waiting for the reaction of the dollar. If the dollar pops higher, energy will go down. If the dollar goes down, energy will pop higher. So this is what the chart is waiting for. And therefore, I say for energy investors, be careful of becoming too greedy. Yes, Jerome Powell might come in your favor and push the dollar down and energy will boost higher. But again, what if he comes out hawkish? What if he says, hey, folks, inflation is not down. So any talk about a pivot right now is delusional. We're not going to pivot. We're going to do the 75 right now. We're doing another 75 by December. The dollar is going to pop higher and energy and commodities will go down. Now, if that happens, it might be a buying opportunity for oil and energy. We'll talk about that if it happens. But here it is, the daily chart for yields, the 10-year yield, most importantly. Now, notice that the 2 is actually moving higher, the 10 is stalling. So which one is telling the truth here? In the meantime, the yield curve is actually inverting more. But equities bulls, bond bulls, which in effect makes them yield bears, would say that this is a bear flag consolidation pattern. Sooner or later, the 10-year yield will go down, making a lower low. And the grand theory at the end of the day is a head and shoulder formation. That would be the top for the 10-year, and down it goes, and that would be the bottom for the equities market. For now, it is too early to assume that. We need to get the Fed out of the way. And here's the TLT, a daily chart. What's going on here? It is consolidating below the resistance zone that I identified. And again, the conflict is here. Bond bulls would say, hey, this is an A, B, C pattern. The chart is now forming the B leg. Soon enough, it's going to form the C leg, and higher we go. But bond bears would say the opposite. They will say that this is a reverse ABC pattern. The chart could not even have the energy to make it above or to the resistance zone. And it has already formed the B leg, and now it is amidst forming the C leg, which will take us down all the way to 87.94. Again, Jerome Powell is going to resolve this conflict. If he indeed comes out dovish, the TLT will move higher and the ABC pattern will play out. If he comes out hawkish, the TLT will go down and the reverse ABC pattern will play out. So you can see from this illustration alone that the market is neutral right now. The market is hesitant before heading into the Fed meeting. It is the calm before the storm. But perhaps the most bullish chart for equities bulls is this one, the VIX. 4 hours chart. The volatility index is struggling over and over and over again to pop higher. And today it did gap higher in the morning initially, but it closed at the lows of the day again. Now the VIX is getting a little oversold, and could this consolidation be the calm before the storm? Powell comes out hawkish and the VIX pops higher. That is entirely possible, and this is the consensus that I have right now. But as a market bear right now, I would like it even more if the VIX goes down all the way to 24.29 before the meeting, meaning tomorrow, because it tames down the expectations. It gives the bulls the false sense of security. It makes the risk to the downside when it comes to stocks. But if they're heading into the meeting bruised and damaged, the stock market down big, the VIX is sky high, then the risk becomes to the upside when it comes to stocks. And this is what the bulls should be hoping for. The problem is they front-loaded all of these gains ahead of the meeting. And now comes the moment of truth. Will the Fed confirm the move, or will the Fed hit them with a wake-up call? The pivot is not going to happen. And if that is the case, the VIX will shoot up higher, and it will crack above 33 once and for all. Now here's Apple 15 minutes chart. Last night we talked about a head and shoulder formation. Despite the push higher, which was algorithmic in nature, it was related to short covering via options, but now the move is over, and Apple is parking above 150 in violation. The battle of 150 is over. The bears won. The bulls have no place at all to be trading above 150, and they're about to get their asses towed. Because what if this is a bear flag consolidation pattern, and then Apple goes down to 150? Maybe it rebounds higher from that point on, and then it loses 150 once and for all, and it closes the gap at around 145. You think about it, Apple doesn't have any fundamental case to trade above 150 at this point. None at all. What about Tesla? 30 minutes chart. What's going on here? Now the chart rebounded from the support at around 217.88. And it is now trading above the next support of 224.39. It is making higher lows, but it's also facing massive resistance right now. If the chart makes a lower low in the trend line, but most importantly, if it loses 224.39 as support, then we're going to become bearish. And the confirmation would be losing 217.88. That would be the point where you double down on the bets against Tesla. Otherwise, for now at least, the bulls remain in charge. And lastly, what about Bitcoin? Tulips, what's going on here? Now the bears would argue this is a double top formation, even though the chart retested 20,000 as support twice. And so far, so good. So the rebuttal to all of that is, wait a minute here, Bitcoin is making higher lows, at least for now. There's a trend line. And who's to say that Bitcoin might go higher again, face the same resistance, then go down to the trend line, catch support, making another higher low, and eventually move higher and crack above the double, maybe triple top at that point and make a new higher high. This is entirely possible. So if you want to bid against Bitcoin, A, you got to wait for the trend line to be broken, and we see a pattern of a lower low. B, you got to see a confirmation that 20,000 is gone as support. Absent of that, the bulls are in charge. Now, here are some bonus charts for you, and we start with the ticker EQT. The moment I saw in the morning the natural gas is blasting higher, I said this looks like an EQT kind of week. And immediately EQT blasted higher, and I believe it closed the day with gains of about 8%. When we look at the weekly chart, it looks as we have a reverse head and shoulder pattern. If that is the case, the next resistance would be 45.5. In the meantime, we can ride the chart all the way higher until it gets there. If it cracks above it, the chart will make a higher high. And then we have Meta. This is a monthly chart. Look at this. This is a massacre. This is one for the books. Generations from now, I'm going to look at this chart and study the history. Maybe it's going to be a Harvard case. We'll see. But the point I'm making here is the chart is severely oversold. From a daily perspective, from a weekly perspective, from a monthly perspective. What does that mean? It means the risk is to the upside. We could see a massive short covering rally here, but it's going to take one thing. One thing has to happen. It's going to unlock a massive short covering rally. And this thing is Mark Zuckerberg capitulating and saying, okay, no mas, I'm done with the metaverse. We're going to tone it down with the metaverse lunacy. And a little birdie told me that his friends, a lot of billionaires that Mark listens to, are telling him exactly that. So how do you trade it if Mark indeed capitulates and says, okay, we're done with the metaverse? For now, you're catching a falling knife. So the strategy would be buying out of the money calls, let's say in 2023, way out of the money in increments. because we have no idea when the capitulation is going to happen. Maybe more pain has to happen first before Mark capitulates. In the meantime, you don't want to go all in this bet. You want to buy in increments, out of the money, and with a longer expiration date. When the pop happens, you're going to see these call options appreciating handsomely. And the last one I have here is Netflix, and I tweeted this. If the dollar continues to rebound, the recent rally in Netflix will flush down. What do I mean by that? Here it is. A daily chart for the name. For now, it is overbought on the RSI, the MACD. It is holding onto the support of 290, but the likelihood is, if the Fed comes out hawkish, the dollar pops higher. This is one of the most sensitive names to the US dollar. We covered the earnings, and we found out that the company is losing tremendous growth based on the currency impact alone. So if that is the case, the chart goes down to close the gap at 250. That would be an excellent trade. But rest assured, if you happen to be bullish Netflix, nothing will change here, because even if it goes down to close this gap, who's to say that the name is not going to rebound higher in an A, B, C pattern? And eventually it's going to crack above 290 once again and make it all the way to closing the gap, let's say at around 345. And lastly, what about the ticker WEAT for wheat? This is a proxy for wheat futures, and this is a weekly chart. Look at this. We have a gap higher. The MACD indicator is about to pop, producing positive impressions on the histogram, indicating bullish momentum. If that is the case, using the Fibonacci retracement levels, the minimum gain from this point on could be at around 8%, and then we'll take it from there. The risk to this trade is, what if Russia comes out and says, never mind, the deal is back on? So this is the risk you're going to assume being long wheat. And lastly, moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? We have the final reading for the manufacturing PMI. We also have the JOLTS, job openings and quits. This will be important for the Fed. And then we have construction spending and motor vehicle sales. And with that, folks, this is all I got for you for now. Once again, thank you for your support. Thank you for listening. Thank you for watching. And I will talk to you again tomorrow. Take care.
A little slow tonight, isn't it?